Hello everyone, this is Brave Chicken Trader. This is my first video and I'm going to talk about the overall market trend by analyzing 5 different charts. Okay, let's get right into it. The first chart that we want to talk about is DXY. My overall assessment of the XY is very bullish. Technically, DXY was in an uptrend, but it hit the resistance at 113 level, 114, and it went down. But this year, it has been in this like a down channel. So recently, as you can see on this daily chart, it has broken out of this channel over here and also broke this $104 resistance level. So I think like technically DXY is very bullish, and also fundamentally, I think there's like a fundamental reason that DXY will go up way higher than this. Let's talk about that. The reason that I believe DXY will have upward momentum is because the difference between European and American monetary policy. You might have heard about this. European country, EU, is in economic recessions. If you look at the latest GDP data, it is at around 0.4%, whereas the US GDP is still like above 2%. So the US economy is still strong, whereas European country is going through recessions. So I believe that European Central Bank will lower their interest rate sooner than the Federal Reserve. So what's going to happen if they lower their interest rate? Whereas the Fed will raise, well, even they just keep their current rates, what's going to happen? The money will flow out of the European market into the US. And if the money flows into the US market, what's going to happen? It'll raise the value of US dollars. That's the reason that I believe DXY will go up. So I'm gonna but I'm not gonna trade DXY. I'm gonna use different. I'm gonna use like an ETF actually. I'm gonna use UUP. It's like a US dollar like a index ETF. The chart is a little bit different, but the direction is the same. So as you can see, UUP was in this like a channel, but recently it has broken out of it and retested, and it was going up. So I'm just gonna wait for a pullback to this $29 level. And I'm just gonna scale in a little bit. And when it moves above $20 level, I'll just go all in over here. Probably it'll go up like this, and put my stop loss at 28.50 or 60 over here. And I think there's a chance that UUP will hit this like a resistance level at around a little over $30.50. That's my trading plan. Okay, let's move on to the next chart. The next chart that we're going to talk about is Bitcoin. As you can see on its weekly chart, Bitcoin made double top as 6,900, and it went down a lot last year. But this year, it showed a little bit of momentum here, but still like Bitcoin is trapped in this like channel here. And my overall assessment of Bitcoin is it's either neutral or bearish. So actually, I'm not going to trade like Bitcoin at this point. The way I see it is that, as you can see on this daily chart over here, looks like there's like a really strong support at 25,000 level. It tested here and tested here again. So there, I think like it is possible that it might like pop back up here, but overall, Bitcoin still is in this downtrend. So even if it moves up a little bit over here, I think like the momentum will be very weak. And if it breaks down this level at 25,000, I think there's a chance that it might retest 2,000 level. So either, yeah, I could be wrong. It might like a break out of this downtrend and move up, but the chances are, I think it'll revisit 20,000 level. So at this point, I'm not going to trade Bitcoin. Okay, and let's move on to the next chart. The next chart that we're going to talk about is crude oil. Oopsie, made a mistake over here. I think like crude oil is in a very bullish condition. Reason is, if you look at its weekly chart, yeah, it has made a cup and handle. Can you see? Can you see it? If you look at the daily chart, it looks really obvious. Look at this, cup and handle. And crude oil broke out of this resistance level at $83. So, and the reason that I believe crude oil has upward momentum is because like OPEC Plus, they wouldn't like increase their oil production. Either there's a chance that they might cut down the oil production or just keep the oil production at this level. So I think like there's a chance that it might really broke above this $100, might even retest over 120. So my overall assessment of crude oil is that it's very bullish. And how I'm gonna trade it, either I'm gonna like trade futures, or I might use like an ETF, like a USO. Just I'm gonna like wait and see how the price moves over here. And I think like the ideal entry is at $84.50 or 60. And if it moves down to this level, I'll enter a trade and put a stop loss below 82.50. The way I see it is going to pull back and goes up in the future. Actually, the rise of the crude oil will pull like the Federal Reserve in a very difficult situation, because if the crude oil prices goes up, like the inflation will go up too, and the Federal Reserve, it might even have to raise interest rates one more time. But if they do that, I think like the U.S. economy will be in a very dire situations. We'll see. Okay, So crude oil is very bullish. And the next chart that I want to talk about is E-mini. And I think E-mini is is bearish. It's still like kind of like dancing around. If you look at the daily chart over here, it's still dancing around over here. Just looks like you want to go up. Also looks like it's going to go down. And if you look at the weekly chart, some people might see a cup and handle forming over here. Can you see? But if you look at the daily chart, I think it is making this head and shoulder. Left shoulder, head, and right shoulder. And I think this is more of a like a dead cat bounce or bear trap rather than a bull trap. And if ES will break down this 4,350 level, I think there's a chance that it might revisit 42,000 level, and there might be some dead cat bounce. But I think like at this point, like we have to wait for like the incoming data. If you go to Forex Factory, you can see that a very important data will be announced next week and the week after. The first one is CPI. Yeah, next Wednesday, they'll announce like a CPI and core CPI. And I believe that the CPI will be way higher than the forecast. And the week after, yeah, they'll announce federal funds rate. I think this will cement the overall direction of the market. But in my opinion, I think the market will go down. So E-mini is very bearish. And let's move on to our last chart, which is gold. I think gold is either neutral or short-term bearish. As I said before, like if the US dollar index will move up, like the gold will go down. So like a short term, I think gold is very bearish. It might like break down this support level, 1900s. But long term, I think gold will be very bullish. The reason is that if you look at the weekly chart of gold, what do you see over here? Yeah, I think is spring. If you're familiar with the Wyckoff's like a method, this looks like spring, where the institution shake up retail traders or investors, and like a gold will go up higher long term, especially if the U.S. economy is in dire situation in the future. But short term, I think it's either neutral or bearish. If you look at the chart, the gold has been trapped in this channel. It's just moving but dancing around here. So like I think like the best move is just stay out of gold for the time being. until you're convinced that it is making a definite directions. Okay. So that's it for today. This is my first video. Probably made some mistakes. Well, it sounds awkward, but you gotta start from somewhere. Anyway, if you like this content, don't forget to subscribe and hit that like button. Okay, bye-bye.